Hey everyone, welcome back to Corporate Decoder, the place where we break down the secrets hidden within endless corporate filings, and I have a juicy one for you today. A shareholder report that's got some interesting numbers that might make you scratch your head. So what's the real story behind this financial report for the IFT money market portfolio, Class A? Let's dive in and find out. We're looking at a certified shareholder report, which is basically a deep dive into how a registered management investment company is doing. Think of it as a super detailed progress report for investors. The company we're dissecting today is Institutional Fiduciary Trust, specifically their money market portfolio Class A shares. This report covers the period up to June 30, 2025. The main goal is to give shareholders a clear picture of what's been happening with their money. Let's talk about costs first, because who doesn't want to know where their money is going? For every $10,000 invested in Class A shares, the costs were just $34, which is about 0.33%. Now, importantly, this number already includes some fee waivers and expense reimbursements. Without those, the cost would have been higher. It's good to see the managing expenses, but it also makes you wonder how much they're really covering with those waivers. Now for performance. As of June 30, 2025, the fund's 7-day current yield was 4.24%, and the effective yield, which accounts for reinvesting interest, was 4.33%. The report says the fund's performance was mainly driven by high short-term interest rates. Mean good news here. Looking at the key numbers, the fund had total net assets of a whopping $5.732 billion. That's a lot of money. The total number of holdings was 93, and the total administrative fee seems quite high when you compare it to the net assets. It's almost 0.15% of the total assets just for administration alone. Digging into what the fund actually invested in, we see it's almost entirely in money market funds, specifically the US government money market portfolio. About 100.1% of its investments are in this master portfolio. This structure, where one fund invests all its assets into another, is called a feeder fund structure. It's common for money market funds to achieve economies of scale. Now, there was a change. Effective May 9, 2025, the fund's investment manager agreed to waive fees and reimburse operating expenses. They did this to keep the total annual operating expenses at no more than 0.17% until October 31, 2027. That's a pretty significant commitment from the manager to limit expenses for investors. Moving on, the fund has adopted a code of ethics for its top officials. This is pretty standard practice to ensure that the people in charge are acting ethically. They also identified an audit committee financial expert, Mary C. Choksey. This means she's considered to have the necessary financial skills to oversee the audit process, which is crucial for transparency and accountability. Let's talk about the auditors. For the year ending June 30, 2025, the audit fees billed were about $18,000. That's down significantly from the almost $60,000 in the previous year. Interestingly, tax fees jumped to over $9,700 for 2025 from zero in 2024. The report also mentions fees paid to the auditor by the manager and its affiliates, which were quite substantial in the prior year for a global tax platform, but zero for the current year. It's always interesting to see how these auditor relationships work, especially when other entities are involved. Now for the heart of it all, the financial statements and highlights. This is where we see the real numbers. Looking at the per share operating performance, the net asset value at the beginning of the year and the end of the year was both $1. This is typical for a money market fund, as they aim to maintain a stable net asset value of $1 per share. The total return for the year ending June 30, 2025 was 4.43%. This is a healthy return, especially for a money market fund, which is generally seen as a lower risk investment. And as we saw earlier, the expenses after waivers were 0.33%. That's quite low, which is good for investors. The statement of assets and liabilities shows total assets of over $5.7 billion and liabilities of about $21.5 million. This results in net assets of exactly $5.732 billion, matching our earlier figure. The fact that paid-in capital is so much larger than distributable earnings suggests that the fund mainly grew through new investments rather than investment gains. In the statement of operations, we see investment income from dividends of over $221 million. Total expenses after waivers came in at about $8.7 million. This all leads to a net investment income of over $212 million. It's a massive income, driven by those favorable interest rates mentioned earlier. Interestingly, the report also includes financial highlights for the US government money market portfolio invests in. Here, The total return for the year ending June 30th, 2025 was 4.62%. The expenses after waivers were a very low 0.15%. This reinforced 25 was 4.62%. The expenses after waivers were a very low 0.15%. This reinforces that the underlying master portfolio is very efficient. Looking at the schedule of investments for the master portfolio, it's almost entirely US government and agency securities with about 75.4% and then repurchase agreements, making up about 24.5%. These are all short-term, low-risk investments typical for a government money market fund. The largest holdings appear to be various repurchase agreements with major banks like Bank of New York Mellon and Deutsche Bank, all with very short maturities clearly listed. Now, let's put on our analyst hats and look at the broader picture. Institutional Fiduciary Trust as a whole seems to be managing its money market portfolio quite conservatively, which is expected. The feeder fund structure where they invest all their assets into a master portfolio is a smart way to keep costs down. The very low expense ratio, especially after waivers, is a big plus for investors. The fund's performance was also solid thanks to the favorable interest rate environment. The key takeaway here is the stability and low risk profile characteristic of money market funds. However, a couple of things stand out. The administrative fee paid by the IFT money market portfolio itself at over $8 million on $5.7 billion in assets is something investors should keep an eye on. While the underlying US government money market portfolio is very efficient, the feeder fund structure has its own layer of costs. Also, the report details the board's review of the management agreement for the master portfolio. They analyze performance, fees, and quality of services. It's good to see that a thorough review process is in place, ensuring that the management by Franklin Advisors Inc. is fair and reasonable. However, it's noted that the master portfolio's performance was below the median in certain periods, attributed to a shorter weighted maturity for liquidity, which is a trade-off for safety. Overall, this report paints a picture of a stable, conservatively managed money market fund that provided decent returns for its investors during the reporting period, largely benefiting from the prevailing interest rate environment. The feeder fund structure, while efficient, does add a layer of expenses that investors should be aware of. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to join our community discussions. Thanks for watching. See you next time.